Supercharged transmission received, message decoded, strategy initiated. Welcome to the age of monetary awakening. You've received the signal. The rules of the game have changed, and there is no turning back. Escape velocity. Why crypto adoption is surging. The digital revolution isn't just a trend, it's a seismic shift in how we view and manage money. In less than a generation, cryptocurrency has gone from fringe tech to a cornerstone of the new monetary order. Digital natives and generational shifts, the rise of the crypto-curious. Crypto's explosive growth, 300 million users in just 12 years, signals more than mere numbers. It represents a cultural revolution. Gen Z and millennials, disillusioned by traditional finance, view decentralized assets as both a rebellion and an invitation to inclusion. Recent surveys indicate that over 94% of crypto purchases come from these younger generations, and nearly 34% of Gen Z now prefer holding crypto over cash. This generational pivot is not only reshaping financial markets, but also redefining personal empowerment in economic terms. Macroeconomic uncertainty, the flight to safety, inflation, geopolitical tensions, and relentless money printing have created a perfect storm for the search for hard money. In nations like Venezuela and Zimbabwe, where hyperinflation erodes the value of local currencies, citizens are increasingly turning to Bitcoin as both a daily transactional tool and a store of value. Comparative analyses have repeatedly shown Bitcoin outperforming traditional safe haven assets during economic turmoil, underscoring its design as a bulwark against fiat debasement. Digital transformation in finance. As global banking undergoes rapid digitization, blockchain technology is ushering in an era of unprecedented transparency, efficiency, and security. Bitcoin stands as the immutable bedrock of this new financial order, borderless, open source, and programmable. Institutional investment and new products. The Wall Street embrace. The institutional wave is undeniable. Major financial institutions and corporations are rethinking their treasury strategies. Recent projections suggest that US spot Bitcoin ETFs could reach as much as $1 trillion in assets under management by 2030, a development that will funnel passive dollars from IRAs and pension funds directly into Bitcoin, amplifying the supply shock. Corporations such as Tesla, Strategy, Square, and innovative disruptors like Metaplanet are already pivoting, replacing traditional stock buybacks with strategic Bitcoin repurchases to build inflation-proof treasuries. Influential leadership and cultural momentum. The rise of the Bitcoin. Maximalist visionaries like Michael Saylor, Cathie Wood, Jack Dorsey, and Tim Draper have become the rallying cry for Bitcoin maximalism. Their public endorsements, combined with pioneering moves like the 2018 book, Bitcoin Standard, the decentralized alternative to central banking, convinced El Salvador's president towards adoption of Bitcoin as legal tender, are reshaping public opinion and accelerating global integration of the asset class. Meanwhile, market whales, those colossal players like Michael Saylor's strategy company with vast capital, execute massive trades that send ripples through the system, intensifying the network effect of Bitcoin adoption. Bitcoin, the path to financial freedom, from seed to giant forest, a market ripe for disruption. In a world where traditional assets dominate, real estate at $330 trillion, bonds at $300 trillion, equities at $115 trillion, and fiat money at $120 trillion, Bitcoin remains a mere fraction of the pie. Yet, with a global asset pool exceeding $900 trillion, even a small reallocation toward Bitcoin could spark a monumental revolution. Imagine a chart where Bitcoin's modest market cap today is only the prologue to an explosive chapter of growth tomorrow. As more fiat money flows into Bitcoin, fueling a relentless supply shock through halving cycles and accelerating corporate deposits, the available float of coins diminishes. Think of Bitcoin as a unique closed-end bank. Each new deposit or purchase removes satoshis from circulation, much like an exclusive share in a rare commodity whose value skyrockets with scarcity. This isn't a pump-and-dump scheme. It's akin to the enduring appreciation witnessed in prime real estate, where true ownership begets lasting wealth. Reverse bank run. A paradigm of value transfer. Envision the concept of a bank run, but in reverse. In a traditional bank run, depositors withdraw funds en masse, precipitating collapse. With Bitcoin, the dynamic is flipped. Supply shock, the scarcity engine. Bitcoin's fixed supply of 21 million coins is its ultimate superpower. Unlike fiat currencies that can be printed at will, Bitcoin's scarcity is hard-coded into its DNA. Each halving cycle, occurring roughly every 4 years, cuts the rate at which new coins are minted, thereby intensifying scarcity. As institutional deposits pile up and long-term holders remove coins from active circulation, a phenomenon known as decreasing float, even modest demand increases can trigger significant price surges. The real estate analogy, lasting wealth through true ownership. Like prime real estate in a coveted location, Bitcoin's scarcity and true ownership principles set it apart as an asset class for the long haul. When you control your Bitcoin with your private keys, you're not just holding a digital token, you're securing a piece of the future financial landscape. As demand intensifies and supply tightens, Bitcoin's price could mirror the enduring appreciation observed in physical property markets, rewarding those who hold for the long term. Strategy BC, the battle for hard money, a call to action. Bitcoin's rise isn't coincidental, it's a direct response to relentless money printing, diminishing purchasing power, and the global quest for absolute scarcity. Strategy BTC isn't just a catchphrase, it's a rallying cry for individuals and corporations who refuse to be part of a diluting fiat system. Bitcoin's power law, from seed to dominance, the network effect. Imagine Bitcoin as a seed that grows into an unstoppable forest. Its adoption is exponential. Every new participant intensifies its network effect in line with Metcalfe's law, which states that a network's value grows as the square of its users. With each halving cycle, reduced supply meets surging demand from whales, ETFs, and corporate buybacks. This hyper-bullish momentum, echoed by traders' shouts of "to the moon," is not mere hype, it's the manifestation of an asset engineered for perpetual growth. The inevitable fiat debasement, a mathematical certainty. Bitcoin is the ultimate cheat code against wealth dilution. The finite supply stands in stark contrast to fiat's endless printing. Even a modest reallocation of part of the $900 trillion global asset pool into Bitcoin could drive its price to astronomical levels. Every halving and institutional deposit shrinks the available float, intensifying scarcity. Despite short-term price swings, Bitcoin's long-term trajectory remains upward, bolstered by engineered scarcity and global adoption. Do you have enough Bitcoin? The ticking clock. Every second counts. With fiat currencies multiplying exponentially, Bitcoin stands alone as the savings technology designed not only to preserve, but also to grow value over time. As more capital shifts from depreciating fiat into the digital realm, the window for acquiring Bitcoin at today's levels is closing. The game theory is clear. The earlier you join, the greater your potential reward. End transmission. The game has begun. Strategy is everything, and the Bitcoin standard is the path forward. When the flip arrives, when Bitcoin challenges gold's $12 trillion market cap and competes with the $900 trillion global asset pool, will you be on the right side of history? Strategy BTC, your invitation to the new monetary revolution. Tickets to escape the matrix are priced in Bitcoin. Recent online research confirms that younger generations are overwhelmingly embracing crypto as a response to economic uncertainty and diminishing faith in fiat. Institutional moves, from multi-billion-dollar corporate buys to emerging ETF markets, further underscore Bitcoin's role as the modern-day hard money. Combined with the mathematical certainties of its fixed supply and the self-reinforcing dynamics of its network effect, Bitcoin's ascent appears both inevitable and revolutionary. The future of banking is here. Every strategy should be powered by Bitcoin. The revolution is in motion. Fix the money, fix the world. There is no second best. Stepping into the future, a dazzling spectrum of pure energy,